Phoenix of the team.
All right, ladies and gentlemen, welcome back. We got Shark Talk, first one of June coming at you, June 21st, is it? Whatever. Holy shit, the market's actually bouncing. But first, Bennett took some people to LBI this weekend. You want to give us a little taste of the beach?
Somehow I planned 2 trips back to back, not knowing. We had the track day on Thursday. Which we had, it was maybe 25 members came to. It's a lot of fun. One guy crashed like an idiot, not a member.
Nice.
Total random M4. But
let's make sure everyone's signing paperwork. Let's make sure everyone's signing paperwork for the liability.
Well, other than that, we had a great time. A lot of guys on bikes. Jake came out, Ryan came out, Billy. We actually had two Ryans, Paul. A bunch of guys came out. Really good time. Ryan actually passed me on a 400. I'm on an 848, so I'm on twice the bike, and he passed me one of the turns, and it was very humbling that Ryan got the inside corner. I'm like, what am I doing? But anyways, great time. We might do another one in October because a lot of guys, generally had a fun time at that event. We did get pulled over a couple of times because we were definitely driving the speed limit. So that was a fun event. And then literally the next day we got back and went down the shore for the week. And some of the members from the track also came down and met us down there. Ton of fun. We got some funny videos. We have a new ad that we're going to run that has Blue in it. Of course, the little puppy that's always barking in our videos. So we used him. We put him to work down the shore.
It's time to read.
There's always time to read.
There's always time to read. Oh shit!
But a great, nonetheless, great time. And I think with that, we'll get into market outlook.
All right. And with that, let me share my screen over here.
Oh, should be good now.
All right, so we got the S&P. We finally got a bounce in this market. We're bouncing off this 360 area. If we look back, you always look left for areas of support resistance. And, this was an area we had a significant breakout from where, if you remember, it was a beautiful pattern. We gapped up to the area too quickly, consolidated, and then began this massive breakout. And now we tested to the downside. It's still significant support. So we're bouncing off that level. Do I think the lows for the year are in? I do not. Do I think this bounce can have more legs than people anticipate? Yes, I do. I wouldn't be surprised to see, a 5% move or so up in, what would that be? About $20. Yeah, that would only be a 5% move from here would only be up to the 400 level. And then that would be, an 8% bounce, which, would again retest this area right here, this harsh downtrend. So if we come in contact with this area in the 400 area on this bounce, that would make a lot of sense. But, very, very random, very volatile action right now. I'm definitely more focused on relative strength and sectors and things like that. What are you looking at over there?
So I think let me share my screen real quick. I think the one thing that I'm kind of,
I got to stop share. Boom.
Yeah, no, we're
Right.
good.
Yeah.
You can see my screen. So one thing I saw this morning with some of the guys in the pre-market call was kind of comparing the 10-year. We've been talking the last couple of weeks on, as the 10-year continues to, trade higher, puts pressures on the equity markets. And with the Fed raising rates, it kind of goes hand in hand. And now that we've kind of pushed above this major, I have let me change this to a monthly. This major level of resistance for many, many years, going back almost nearly a decade now, we really haven't seen the 10-year above, 3.25. That again, it looks like we're going to continue higher, but when you look at it, how it's traded this past year, we had basically 100% increase in the 10-year in the last year. This little pull in, this last little kind of push, which reminds me very much like the energy sector. Again, same kind of percentage move. Both, this energy sector and the 10-year both up about 100% this year. We had this dramatic run up, and then we had this little shakeout, and it's kind of last when everyone kind of chases it, that last kind of push up, and then again recently the trade has started to that upward trend is now starting to change. And now again, the next break is now under 100, and maybe the easy trade in energy is over in the short term. Maybe it starts to come back to earth, back to the 200-day, and maybe even lower. And that's just kind of my thinking with the 10-year, that maybe we get a little bit more of a push, a little bit higher, but eventually you get a little bit more of that parabolic move and that rollover, and maybe that coinciding with that market bouncing, maybe it gives us some legs, and we can push back, kind of like what you mentioned. So that's really it. Again, a lot of the major sectors have been all getting pretty destroyed, but we saw a lot of the red flags a few weeks ago. Utilities, we were talking about the big picture. We saw these lower highs here, which was obviously not a good sign. And now we're all the way back at support. We saw, materials. This was a beautiful, massive bull flag at all-time highs, looked amazing. But once it broke support, it's very obviously now, a topping pattern. And now it's when we want to avoid, because this measured move, is 30 points lower. That would take it, down to the 140. So we're just seeing overall a lot of sectors in these breakdown stages, all kind of breaking support, that just doing less, kind of avoiding the market, avoiding trying to catch these support buys. And in the pre-market call, there was quite a few members that were looking at support buys, like CINF was one of them, but they're just too perfect of support buys that it's like they're just going to get smoked. And we're just seeing that in the bigger sectors, that you don't really want to be in the space right now that you're trying to catch support, because if you can wait and buy 110 in CINF, guess what? This thing's going back to 100. You really don't want to have that time that you can really catch support and like wait for that price, because when that happens, the name often is going to kind of push lower. So that's kind of my little take on things I've been seeing.
Yeah. Let me you touched on some things I'd like to talk about. Let me share.
Yep. You should be able to just share it. You should be able to do it now.
So you're touching on the VDE, and it looks exactly like a lot of the leading stocks in that sector, which we know like Oxy, for example. Huge run up, and then a pretty harsh action the past 2 weeks, where it's down 20% from highs, similar to that. Exxon looks just like the VDE. And so what I was talking about the newsletter last night was, are these trends going to hold up? So we'll go back to the VDE, and it's is energy going to remain the leader, or is it finally time for it to pull in? And there's massive implications in both those scenarios. If energy continues to lead, we continue to see gas prices tick up. We continue to see inflation tick up. If we finally see it do come in, right now, that's the largest driver of inflation is oil and gas prices. So what I was talking about in the newsletter about the different waves of a bear market, what we saw in 2008 was very similar action, where it was, that first sell in the beginning of the year. I'll grab the SPY. This first sell in the beginning of the year, that's like, stocks coming back down to earth. That's, valuations coming in. That's a more normalization of PE ratios and things like that. But, we still look at the macro trend, and bull market's still on. And then the second wave is, pretty destructive. And that's what we've seen the past 2 or 3 months, where, just constant selling, some pretty vicious action. And during that time, in that second wave, is when we see commodities go on a super cycle, energy. And it's just like kind of the exact same playbook. So I feel like we have to at least, take notice of it. So now, then the third wave of selling was when commodities were finally able to come in, and they brought, the S&P down with it. And that's when, the dramatic selling really happened. And then that's when we finally saw capitulation, which eventually led to a market bottom. So now I have my eyes on oil on this little trend line right here, as to whether we continue moving from higher from here. This is a big shakeout, or we're going to, begin to start seeing that third wave of selling, which may lead to, another 10, 15% down in the S&P, but then it would finally give us that capitulation where we can start having more confidence in the short term about getting long and things of that nature. So definitely eyes on energy in this trend line and things like that. But yeah, some good points we touched on there. Where do you want to go from here?
Top ideas?
So top ideas. All right. So there's 2 sectors I'm looking at that I noticed that are really giving some weird strength. And that's why I made this CYTK trade of the week. It looks pretty good. It's a lot of the biotech names, but it's not the IBB. The IBB still looks pretty disastrous. But if you go into the weeds of biotech names, you'll see a lot of pretty decent looking charts. So the CYTK triggered today. What else? Bios, solar stocks. There's a few other bios that just don't look ready yet. I'll skip those for now. But solar stocks look really good. We look at the TAN ETF. It's popping a little bit, but name specifically is ENPH. I like this one today through this 188 area. I didn't buy it because it's kind of a lot of risk to this lows area.
Mhm.
But I'd like to see this name tighten up. And then there are a few other names in the sector. This SEDG, Sedge, that one looks like it's starting to ignite. First Solar is starting to look good. So First Solar, I'm wondering if it's ready to make the turn, and then it'll finally give us a nice trade, a nice downtrend breaker, because we're seeing all these solar names go. So now I'm going to obviously wait for the chart to set up, but 72, 75 area, I may look to buy that one. What was the last one? What do I have up there? JKS. This is one I really like. JKS coming out of this big base. And I mentioned Chinese stocks yet. Chinese stocks are starting to look good. They're ticking up when the rest of the market isn't. And this JKS is sitting on this huge base below this 64 area, kind of starting to ignite today. So this one's starting to look really good. And this is a really positive development that we're seeing specific sectors disconnect from the market weakness. I think it's really positive because the past few weeks, besides energy, it seems like it's been every single sector is just getting taken out to woodshed, whether it's technology, financials, even REITs, which are supposed to be popping in rate rising environment. They've gotten taken out to woodshed. Even utilities, type up this SO, for example. It's like, woof, look at that move. It's disgusting. And these are supposed to be safe haven stocks. So it's nice to see names, ENPH, the JKS, the First Solar, that they're starting to look better. So I have my eyes on those. And then also these Chinese names, they already made a huge move, but something happened on May 12th where all these names bottom. Here's May 12th. And you look at the action in the S&P since May 12th, it ain't good. It's here's May 12th right here. We've done virtually nothing. We look at PDD, for example, it's doubled. There's DQ, same thing. Here's May 12th right here. It's doubled since then. So Chinese stocks were in such a vicious bear market. How's Baba doing? Even Baba since May 12th, it's up, but it's not looking that good yet. But definitely eyes in that area. We're finally starting to see sectors show relative strength. So at least that gives me some positive outlooks on the market as a whole. What are you looking at over there?
So actually, the main one, let me share my screen. So the main one I'm looking at is this Ulta through this. Your boy, I guess your girl.
My boy, I forgot about it.
Yeah, so Ulta is again still looking very good through this 420, 424 area. Again, 200 days kind of acting as support right now, versus 380. Still very wide, just again, very strong name, top right. But this morning on the pre-market call, the members actually had a lot of good ideas that initially I didn't think were that good. I'll go through a couple. So Abby mentioned this Humana. Again, I feel like she's like the Humana like whisperer. The last time she mentioned it, had a nice little run. And today she was looking to buy up through, I think it was 431 or 440, but looking at phenomenal. So I actually hope she took that one. She was looking at this AutoZone back up through this, like she was looking at through 2000. So technically she would have been in already. We were kind of talking more like that 2100 area. But again, this one looks good. Let's see, there's a couple other ones I was just looking through here that she was looking at this CME, I'm sorry, up through this 204 that triggered today, triggered beautifully, simple low day stop. She also mentioned this EL, same thing up to this 240, if she took it today, triggered, and just keep like a prior low day stop. Kusha mentioned this UTHR up this 223, again, triggered nicely so far. And then Heaven was looking at this Duolingo, which
there you go, Chinese stock.
Yeah, so I actually have this app on my phone. It's like you can like teach yourself Italian or English or Spanish. It's actually pretty cool. And our buddy, Rob from Atlanta, he's used this app like 600 days in a row, and you get like, I don't know.
Really?
But he has like the gold star for he speaks Spanish so fluently. It's honestly impressive. But
that's awesome.
I have to text him.
By the way, it's an American company.
Yeah.
So racist.
But again, this Duolingo haven't mentioned again, big base forming down here again. It's under the IPO highs, but we can see this big base forming. Even a lot of those Chinese names that you did mention before, you look at those charts that you mentioned to start at the bottom, you look back, you see this big base. You know, they were super beaten up. We talk about, 3-6 months ago, people were worried about these names getting delisted, and that was the big fear. And obviously, nothing came of that, but that was like the headline fear during that time. And then eventually it didn't happen. The stocks base out and they work to the next kind of like breakout stage. And that's what we're kind of seeing here. I have these like green lines drawn, which, I guess I changed to red, but we can see these higher pivot lows, the buyers kind of stepping up. We see these sellers in this $100 area, and eventually one of these two people are gonna win the battle. So this is one I thought that had been called out that we haven't mentioned. I don't think really ever, and it does look really good. So definitely some very good call outs this morning. Again, your CYTK was on there that someone mentioned, but again, it was your call out. So yeah, some good stuff mentioned. Even though the market's kind of been a little crappy lately, there's definitely is some opportunities out there. You just have to hunt for them.
Well, I think it's very important that we're finally seeing names show relative strength. Names were setting up Friday before we saw this bounce, which is very important, where it's not like everything is going to get destroyed like we've been seeing, or maybe, maybe something is changing within the environment. So definitely important to see, under the hood of what's going on in these sell-offs.
Definitely agree. All right. So you want to get into good and bad trade?
Book of the week. Oh, good and bad trade. Oh, so I'm just going to go through, I haven't really done stuff much from an active standpoint. I'll talk about some longer term trades I was in. You want to unshare, sir?
Yes.
All right. So my trade of the year, believe it or not, and I was talking about this earlier, as I just had to sell some today. WWE wrestling, recession proof. They had some huge earnings, huge growth in their subscription 2 quarters ago, and it's so funny because like I trade these at smaller size in the the retirement account, long term account, things like that, where I'm not as paying attention to these names. So I was going through the account last week and I was like, holy shit, like this is up, whatever it's up. So I bought this, they had the gap up on earnings inside day. I just bought through the high. My price was like 53.50. My stop was 50, and I just kind of let it go. And last week it was at 68 when the market's selling off. I'm up, 30 or so percent. And I just got stopped out of some this morning. And the reason I began to sell it or began to manage it more was because Vince McMahon, the CEO, did you see what happened?
No, I didn't know.
Oh man, they just found out he paid some chick $3 million, not talk about him being nasty, and he has to step down as CEO, and he's the man. So yeah, that one's a tough one. This Kellogg is still another one I've going. If you look at this chart they're in, there's massive consolidation. So they kept me in this one. I remember buying it. I bought it on earnings, and I gave it room. These are more macro trades. So I bought it this day around this right where it is now, around the 69.50 area. I had a stop below this 65, and the fact I'm still in it obviously gave me a great reaction initially, and came in with the market weakness. But now there's news they're going to try to split into 3 companies. The market likes that news. So if the market wants to bounce, I think this one continues with it. The fact it kept me in when I had relatively tight stop, considering the market's down 20%. This thing, couldn't take me out. I'm pretty confident in it. And then the bad trade I had was ALB, where I'm so hot on this sector, but the price action isn't really matriculating like it needs to. It's just getting very whipped back and forth with the market. This is a lithium company. I've talked about this one before, where they've revised their earnings twice to just be like, all right, the way the supply and demand of the economy right now within lithium is just so crazy, and the orders we're getting is that we're going to see a very robust next 2 years. So when that news hit the tapes, it gave us this huge move, and I'm thinking, this is a multi-month, multi-quarter. Maybe I'll be in this trade a year and it'll double or something like that. But it's just not the market we're in. So I bought this 240 area, and I held it through up to this 270, but then I was eventually stopped out down through down through this 219 pivot. I just got stopped out. So, I've definitely left some gains on the table, but the point of that retirement account is I'm not day trading it. So tougher to have these macro trades in this environment when names are getting whipsawed. I still like the name fundamentally going forward, but the chart needs a lot of work right now at this point. So won't be touching it anytime soon, but going to keep my eye on it. What are you trading over there?
So I got two. Let's see. So first was this more recent again. It's just kind of looking back at prior trade earlier in the month I got out of was this SLB, and you mentioned like long term. This was the thing that I got trapped in during the pandemic. So this was like pretty much a horrible long term trade where I pretty much sat through all of the pain. I sat through this entire drop. I think my cost basis was like in the 40s. Sat through this entire dramatic drop, but stuck with it and pretty much took the round trip. And we did a very good job kind of getting out of it before, this kind of disastrous kind of pullback. I got sucked out like 46, missed that last little couple of bucks, but who cares? And didn't have to be a part of maybe this little bit. Didn't have to be a part of the dramatic drop that has come to the name. And more on like the shorter term aspect was with OKE, where I think it was like me and both Kyles were in this that I can remember.
Oh yeah, I remember you. Yeah, I remember you saying that you got to break even, and it was like, and someone was like, "Hey, you don't want to give this run room," and you're like, "Nope."
Yeah. So more. This is again, and I had no expectation of like this to follow, but it was just like in this market, day one, day two, this thing looked great, but then we got this like little kind of inside day-ish day, and it was just like my price is 68. It's coming right back to 68. There's no reason to try to be a hero and like give this verse 66. Like it's more than likely going to see this price anyways. And I'd rather lose as little as possible or make a little bit. So like me and Kyle M, I got out, I think it was like 68.50. Like it came down to 68, bounced a little bit like midday. And I'm like, I'd rather take the half point than just like give it back and get stopped up the next day. So me and Kyle M both got out at like 68.5. And I think it was Colin Cooper. I forgot how he traded it, but he was the one who asked me, and I was like, I'm not losing any money. Like, I'm not trying to do that right now. And
did we stop recording? Wait, did we stop recording? Or was that session disconnected?
Hold on, let me see.
No, we're still recording. All right, cool.
Yeah,
let's keep going. So Colin McCoppin said
he was the one who asked about it. I was just like, I'm like, and this, I'm trying to lose as little as humanly possible. And you look now, this name is down 15 points since we got out, and that's a significant percentage drop. So this is just more of the thesis of like that energy trade is kind of ending. Again, I filled up my car yesterday. It's $120, which it's a little sports car. Normally it's 60, 70 bucks. So like I've never seen 120. I paid $100 last week, and then today for me felt like the parabolic top, like it was 20% higher in a week. And now we're starting to see these interchanges kind of rolling.
I hope you're. Yeah, I would love to see you right. I'm scared to go back to Cali. Cali right now it's like $750 in West Hollywood.
Yeah, I paid $650 yesterday in Jersey. That was the most I've ever paid. It was like $120. It was crazy.
Best thing that ever happened to me was that car, that Benzo breaks down, huh?
We got to do that engine swap still.
I know. You're telling me. Where are we going? Book of the week?
Yeah, book of the week.
Before we jump into that, I let me share my screen.
Mm-hmm.
I want to highlight this. This. I keep talking about it, but this Druckenmiller interview.
Mm-hmm. It's
just so relevant. It's only from a week ago or so, June 10th. And he kind of talks about am I sharing my screen? Oh yeah.
Yeah.
He talks about the current state of everything and, where he thinks everything's going, how this is different than that. And he drops a lot of great facts over there. Like in history, anytime inflation's got over 5%, we've never had a soft landing. It's always led to a recession. Things like that, where it's like the only thing that'll bottom these markets is the CPI number being lower than the federal funds rate. Like that's just historically, that's what the data points to. But he had another great story about 2000 that I put in the shakedown where in 99, they had this crazy year. He hired these two young gunners. He called them gunslingers because he knew there'd be the 21, 22-year-old crowd is more connected to the new data, the tech companies, whatever. That was the dot-com bubble. So they would know all the hot new companies. So they're up. By the end of the year, they make 42%. He walks into George Soros' office. He's like, I can't do this shit anymore. We're at like this generational bubble top. Like I got to sell all my tech stocks. Soros like, okay. He sells the tech stock. Next 4 months, he keeps the gunslingers on, and they're going crazy. They're killing it. They're making 8% a day, and he's losing money. He's shorting the market like crazy. He put on a $200 million short, and he lost $600 million on it. That's crazy. Mm-hmm. So then then he finally takes a loss on that short, and he listens to, he calls it the devil on the wrong shoulder, and he buys 2 billion worth of tech stocks. And he covered his short and got long 2 billion 1 hour before the top. 1 hour. And that he lost, he lost like 10% or 9% in like a week and a half on that last 2 billion trade, where it's like he got smoked on 200 million, losing 600. And then all of a sudden he, like the emotional decision to, okay, now I have to buy 10 times that amount, to the upside.
And
so
lose even more.
Mark's at the top, loses even more. And it was at the top. So it was like, very dramatic up and down. It was in a week and a half. He lost 8% more. So he's down 18% at this point. So he's like, I am fucking mentally shot. Like he's never had a down year before. And at that point he was down 18%. This was like mid-May or whatever. So he walks into Soros' office like, I'm quitting. Like, I'm done. Like, I'm done. I'm out of the business. I'm calling all my clients saying, if you want your money, call this number. If you take your money out, I'm never going to let you back. But, here's the number if you want to call it. I'm taking some time off. I don't know if I'll be back. He goes to Africa for 4 months to make sure he doesn't see anything about the market. So he's truly disconnected, doesn't see a newspaper, doesn't see a stock price, nothing. Ends up coming back in September. And this is why it's so important, because he sees this asset bubble. He sees commodities ticking up like crazy. He sees inflation starting, and he knows the Fed. What's his name? Volcker. Was it Volcker at the time? No, Greenspan. In 2000, he's like, he has to tighten. So what's he do? He loads the boat. He maxes risk on buying treasuries. Bennett, what do you want to tell me about the 10-year?
We haven't seen above these prices in a decade.
Well, no. It's just the same exact trade he put on then worked this year. If we'd seen this interview 8 months ago, I'd be buying an island in the Caymans. But so what's he do? No, I'm kidding. But what's he do? He ends up buying treasuries like crazy, and he makes 40% in the last quarter of the year, and he ends up making, having a huge year. And it was all because he finally got his mind right and was able to disconnect from the markets that he attributes it to just like, if I didn't take a step away, I may have never traded again or never been the same again. And two, just never been able to put on the risk of that size because I was so, I got my confidence back in taking 4 months off. So it's just very interesting to see like the best in the world can just become a fucking day trading disaster. Go 200 million short, 2 billion long, and you royally are wrong both ways in like 3 weeks. That's crazy. So we're running out of time here. We got 9 minutes. That's what I got. I have a book here. We'll talk about it next week. What are you reading?
So I have the book. The book's not here. It's called Grit. It's actually the next month's book of the month. Honestly, very good book. I don't have the quotes. It's out of the screen. Again, we'll go over both books in more detail next week. Other than that, again, if you guys are still watching, you want any of these books, Kindles, if you want the 3 Kindles, just DM us free and we'll send you the link down for free. And if you like this video and you find it in any capacity educational, drop us a little thumbs up. And I think that's it.
So you got, all right, with that, we'll catch you guys next week.